Welcome guys to another episode of Hata Kata. So my name is JJ and together today I have Alvin as our guest. The previous episode we mainly talked about how we got involved in crypto and eventually how crypto and NFTs based on what we know now has transitioned more into far more useful assets like real world assets and also tokenization. So in this episode we will talk more about tokenization and how it actually benefits us, especially people from within the physical space like the Web2 world. I have a few questions right for Alvin from the previous episode. So my main question, like especially the word tokenization, it sounds like I'm launching another coin or a token in general. So is it actually the same as launching a coin?
Thanks for the question. So what I think is not at all. Right? Launching a coin is creating a digital asset, but tokenization is actually giving something more real, such as ownership and giving the rights to something that already has value. So maybe you can think of it this way. If I create a random meme coins, okay?
Yeah, like Pepe or Doge.
Yeah,
right?
I mean, that's just a token. But if I tokenize a building, private company that can potentially generate future revenue, maybe like invoices, carbon credits, or intellectual property, the token represents something more meaningful in the real world because it has a purpose. So tokenization is much bigger than launching a coin. A coin, like memes, they are purely for speculation purpose.
Okay.
Just pump and dump. So it's really about bridging a real world ownership onto blockchain. So that's tokenization.
Okay, so in a way, like I can own part of something that's physical but stored in a blockchain. Okay, so for people who has either long disconnected from crypto or very new to crypto, how would you describe tokenization?
Okay, now we all know that Bitcoin has a pizza day, right? Let's use pizza as an example.
Okay.
Imagine a pizza, normally one person buys the whole pizza. But tokenization, you are able to cut it into slices. When you cut into multiple different slices, so imagine it's a digital pieces. Everyone can now finally own a slice instead of having the need to just buy one whole pizza. Now you replace the pizza with a building, with a real estate, with a company or an investment fund.
Okay.
Right? So instead of only the rich, the wealthy people are the ones that are able to participate. Right now, thousands of people from the middle class or someone who have a slight capability, they can finally own something that they couldn't before. So the asset itself, it doesn't change, but becomes more accessible. Just like what I mentioned in the first episode, it's about accessibility. Through tokenization, you are giving more accessibility to something that wasn't before.
Then that comes to my mind that how do I know the fraction that I own for that specific building is actually owned by me or it represents that building? How does the fractionalized shares peg to the building? Yeah, that's my question.
Very good question, because that will fall into the regulatory and legal framework. So for example, you are buying this KLCC building. How does it prove that the token you own is actually the fractional ownership of this building? So that was the question.
Yeah.
So usually you will need a special purpose vehicle, SPVs, or maybe through a company to actually have an agreement to prove that by owning this token that you own, you actually own a certain percentage of this share about the building. Either that through trust. So these are the ways to prove using the regulatory framework way to make sure that you actually own it. A lot of projects out there, right, they claim to be real world asset. They claim to be fractionalized ownership. But this is a very good question that anybody that encounters such a approach kind of projects out there, before you make the investment, ask yourself again or ask them, how do I assure that I actually own them? Because you wouldn't want to just buy on the story. You wouldn't just want to buy on the hype. Yeah.
So it means that we should confirm whether this can be proven or not.
Correct.
Through methods like legal frameworks and maybe contracts that are actually written
Yes.
that says that this pegs to that.
Correct. And this can be proven on chain.
Oh,
Yeah,
okay.
that's an on-chain record, and that's why you see tokenization actually bridges the gap of Web2 and Web3. Because in the Web2 world, the way of how they usually do things, they are now adopting blockchain. They are now adopting ways to prove something using the technology of the chain.
Okay. That's very interesting. Then is the word tokenization or this term tokenization, is it about technology, finance, or is it about ownership? Because it sounds a bit complex.
Okay, so I think it's actually all three, but ownership is the main thing. However, technology is the tool, the layer where we have to be on this technology to assure how the things move from one way to another. So for thousands of years, we have been improving how we record ownership, from paper certificates to databases and then to now blockchain. So tokenization is not just another crypto trend, but it is an evolution of ownership infrastructure.
So means that in a way it's a more advanced level of how we apply blockchain into real lives. Okay, so now that we've mainly covered on tokenization, then coming to this technology itself and how ownerships are owned, how would you differentiate between access back then and access now that we have tokenization?
Okay, so it definitely plays a big changes because when I first entered investing, when it comes to private opportunities out there, I would say for normies like me, I couldn't get the access to it. So right now with tokenization, we are able to access to like early startups, private equity, VCs, and pre-IPO companies, as mentioned in the first episode. So usually this is something what we call alpha or insights.
Ah, yes.
It's
Alpha.
left for the wealthy people only, the people who have the connections, the people who have the money. That's why the rich stay rich. So the opportunity itself wasn't lacking most of the time, but it was the access that was lacking. So I would say tokenization will change that experience eventually. Not to say 100%, but at least it can close the gap nearer so that people who do their work well, they study a lot, they are always sniping on what's next and what's the upcoming opportunities out there that can go live and they can actually take that step and take part to own that thing. Normies or anyone in this world, as long as you know how to operate a crypto wallet or exchange, you have that opportunity there where you are able to grab something that you wasn't given before.
So means that right now, as long as you are well connected, especially if you have the early advantage through tokenization, maybe then you'll get alpha or early access to like pre-IPO companies through tokenization lah. That's the elaboration.
Yes, one of the example is back then all these pre-allocation are offered to private companies, are offered to VCs.
Yeah,
right.
true. That's very true.
So right now, this offer can offer to other bigger players in the space as well, in the Web3 space. And that bigger player is able to also offer this to the users that they have. So
more access.
correct. Or you can put it this way. In order to participate such early access sometimes, right, you need to have a minimum entry. So you alone might not be able to fulfill that minimum entry.
Yeah.
You need maybe 100 of you. So only then you are able to take up that offer.
Oh, so now I understand more. So in a way, it's like fundraising, but through tokenization in order to like achieve that minimum quantity to like fund that particular venture or something like that. That's my understanding. Is it right?
I would say participation.
Participation.
Yes. People are allowed to participate even if their entry is much smaller.
Okay, understand. Okay, so then now that you know SpaceX is also in the headlines and news recently, especially with their recent IPO, right? Then if it was before the IPO and then if Elon Musk personally offered you his share in the SpaceX itself, would you buy it and why?
Okay, so
Because it also relates to, you know, fractional shares on how he gives out the shares, right? So yeah, coming back to this.
all right, I love that question because it's very interesting. If Elon Musk really called me, I would definitely buy it. Why? Because he called me personally.
Oh.
That's the main reason. No other reason. I can
Okay.
brag about that all day, right? So, but of course, why people are buying it? Because they most of them believe in the future of SpaceX, right? They think that
And the hype around it also.
definitely because everyone is talking about it, and
Yes.
and the valuation is like
Crazy.
the breaking record of
Yeah.
what you have seen in the past.
Although they are down 10% since IPO lah.
Yeah, I mean, for a crypto person like me, looking at charts going up and down, excess up or 99% down is pretty normal already. But I would also say, I mean, if he really called me personally, I would definitely buy, regardless of any position, any entry.
All in?
But not all in. That's the crazy thing. So, but the question is, if I want to be a wise investor, I will look at the evaluation. I'll look at what's the current entry right now if I'm buying it. Do I have space for growth in the short time? Or I can buy it later when I see some corrections. But again, like I mentioned, if he really called me personally, I would definitely buy a spot. That's for sure. Right? Because that's because
Interesting.
of the sentimental value.
and the impact that he has on in this world, right?
I mean, yes, of course. Yeah. So it's strong. And then he has proven many times that things that he have done basically make a big noise. SpaceX is definitely the biggest buzzword in town,
Yes.
right?
Yeah.
Everywhere in the world.
Elon Musk himself is already the marketing
Exactly.
material for
Yeah.
it.
Anything he does, simply a tweet will eventually cause a lot of followers to do something from
Yeah, that is Doge is his favorite thing.
Right.
But this is not financial advice. But do you think with the price that it is now, is it a good time to buy since they are like 10% down? Not financial advice, by the way.
For me, if he didn't call me, no, I'm not buying now.
So you're gonna snipe for that right timing lah.
Yes.
Okay,
Yeah.
then just how much do you think would be a good entry?
I mean, we cannot just determine by price. We gotta observe the situation and the surrounding element that supports it. It's not just about at what price I aim for it, because sometimes you set a price too low, you might never go there.
Yeah.
So you need to monitor the situation from there.
Interesting. So if you talk about tokenization and it's about expanding access to more and more people, right? How does that differ in terms of public and private access now that it's more accessible to people?
Okay, so basically public markets, right, are more accessible. Definitely got some of the restrictions because those were the days in the traditional world. But right now with blockchain, it's basically soft. But private markets usually require higher capital entry and relationships and qualification, right? Sometimes you might have the money to participate, but they don't allow you because you don't have the qualification. So usually the biggest returns will lock in before the public. Yeah, so that's private market access.
And when it comes to public access, means that everyone has to join a raffle to stand a chance to even get in the market through public markets, right?
I wouldn't say stand a chance. When it's public accessible, people can participate.
Oh.
Just that by the time you are participating, the price might have already locked in.
So it means that you're already entering at a higher price.
Correct.
Okay. So that's why
So we always say, early
bird gets the worm.
right? So people want to get the early allocations, the early access. Sadly, a lot of all this early access is for people who have the connections. It's for the people who have the capital and the relationship with the respective projects or companies.
That's true. But since we're also expanding access through tokenization, right, and it's getting more and more accessible, is there a risk towards it?
I think this is something that people should also take note, because by having greater access, it also comes with a greater responsibility. So we still need a lot of disclosure and like governance. And if you are talking about blockchain smart contracts, we need more security audits to make sure things are running safely, and also compliance. Are you compliance ready? So technology itself, it doesn't replace trust 100%, but it strengthens it. So in the world of DeFi, we call it decentralized finance, because a lot of times throughout the smart contract, you can basically execute the deals without having an admin to approve or reject.
Yeah, because it's already coded,
Yes,
hard-coded.
it's a trustless, hard-coded. Well, that is being a fully decentralized finance operated projects.
Yeah.
Do you think it has its downside? Well, there are certain points that we somehow still need people's judgment on certain things. We cannot just let it run autonomously all the time.
Yes.
Yeah. There are things that can be automated, but there are things that still need a few layers of protection.
So there's still definitely room for improvement lah in that case. Okay. Is there such balance between, accessibility and being able to protect investors, in this case through tokenization?
First of all, access and protection, they are two separate stuff. So they are not competing with each other. In fact, they should evolve altogether. So technology gives us a better transparency like blockchain does, and regulation gives us the accountability. So it should complement each other. So they are both necessary. And key point about it is that the question isn't simply whether ownership can be digital, but the real question is whether we can expand access while keeping markets transparent. Aside from that, being responsible and also trustworthy is the key challenge for every companies that wants to do tokenization, that wants to get into this leap to provide a global access, allowing more people to participate. Before they do that, they need to make sure the accountability is in line.
So it means that they must come with a mindset that, this is something for them to be able to raise more funds and gain more capital instead of something that is pump and dump, right? And be more responsible with it, with tokenization.
Pump and dump, it depends on how they allocate their amount of revenue or amount of money they raise and to strengthen their liquidity. I think I would say this part is very deep, because every business have different strategies to maintain their price, to maintain their volume, to maintain the adoption. Aside from that, how are they distributing their revenue, their dividend? That's something where all these big companies, they need to assure the pathway for all that and make sure it's done in the right way.
Okay, understand. So one of the assets you mentioned earlier that were tokenized were like KLCC or maybe some buildings or properties, right? Then aside from properties and buildings, what assets do you think should be tokenized in this case?
Okay, so aside from real estate, I would say private companies and then some revenue generating business and then IP rights like Pokemon. It's like the hype thingy right now. And also investment funds. So anything with real value and if they have the proper governance, I would say it could potentially benefit through tokenization.
Okay, then speaking of things that we can tokenize, what about things that we should not tokenize?
Again, I would say is tokenization explorable for many people? Yes. But is it necessary for everyone to also launch their own token? No, not really. Because if ownership rights aren't clear with the businesses that you are planning to tokenize, and if the legal frameworks don't exist or the transparency cannot be maintained, then tokenization probably isn't the right solution at that point.
So means they will need to have a proper framework first lah, in that case before they tokenize.
Correct.
Okay, so right now we are nearing our closing section for this episode. But before we end the episode, let's have a quick rapid fire session with Alvin. For this session, it's like a yes or yes option where he has to choose one and why. So I'll be giving out two questions. So the first question, would you purchase an actual real estate or would you buy a tokenized real estate?
If it's for investment purposes, I would prefer a tokenized real estate.
Oh,
Okay, because I don't need to go through the hassle of getting bank loans to buy the whole house.
okay.
Yet, I still can have a cash flow generating from that real estate. It also depends on how the dividend was paid out. But there's a bright and decent returns, I would go for tokenized real estate for sure.
Oh, interesting. Then the second question, since we know that you have your own ventures, specifically in F&B, would you personally tokenize your F&B or would you do like a actual fundraising for your F&B if in future you would require more capital to expand your venture?
If I require more capital to expand the business, I mean, usual ways we will have is try for bank loans, right? You
yeah.
commit a loan, you
That's
pay
the most
interest.
common, yeah.
And secondly, you give out some equity or you give up some profit sharing rights, revenue rights through tokenization is one way to do it and giving some life to that token. Maybe you are able to enjoy some business ecosystem perks with that. So which one would I prefer? I would say probably the best of both because as a business operator, sometimes when we do tokenization, it's just the first part. That is only the creation part. But are you able to actually raise the amount or to get the amount that you are looking for? Might not. We don't know. We're not sure how will the market respond greatly or not in that matter.
Understand.
As we have seen, there's many projects that did something called fractionalizing ownership with durian farm.
I might have heard of that. Yeah.
Yeah, correct. So looking at the current market of durian, it's
it's not good. It's not
it's
good.
not good, right? Because there's too many people doing it.
Yeah,
And many
oversupply.
different countries, they also have their own durian farms now. So the problem with supply and demand.
Yeah.
If it's businesses,
Yeah, F&B.
I would say
in this
you
case.
have to align with what you have and what you want to achieve when you want to do this. If you have a big roadmap and highly achievable, the execution and everything is on par, then I would say we can explore either tokenization or through getting a bank loan.
So for you, you would prefer to do both to get both benefits.
Yeah, I
If
mean,
it's feasible.
at current state, we actually do take bank loans to expand as well. Because why? It's profitable. It's already a proven business revenue making F&B retails that we have, right? If not, it wouldn't be around for like 4 years plus now. So if it's a profitable business, and I wouldn't see why one don't consider taking bank loans. I mean, we have heard of SME loans, we have heard of different loans, right? Yeah. So that is one of the common practice for most of the business people out there.
Okay, so now that we've learned more about tokenization, whether it's real life applications or how it all started, especially with Alvin, thanks for his sharing today. And we'll have more juicy and more powerful content that we are gonna cook soon lah. So subscribe, comment, like, and share to your friends if you'd like to see more of this kind of content. And I'll see you guys in the next episode of Hata Kata.
Yay!